Hello and welcome everybody to the Open Bar. I am your host, Steve Straza, Chief Market Strategist at All Star Charts. We do the show every Tuesday, right after the morning show. This is becoming, one of my favorite shows to do each week. It's a lot of fun. Say what's up if you're in the chat. I'm running from a bit of a laptop situation. LFY, scooping and scoring. What is? All right, good. I'm running from a bit of a laptop situation here. Out from the islands. We're live from the Virgin Islands today. The Wi-Fi is exceptional where I am, despite being on top of the mountain up here. It's crazy. I'll tell you, driving around these roads, I think so far we're a couple days in to our little getaway here. And my favorite part of the trip has probably also been equally terrifying and probably been Rose's least favorite part of the trip. And that's just driving around. I got a Jeep and I'm exploring. I was out there this morning. I'm just like checking out the beaches, watching sunrise. A lot of these beaches, they're really treks getting to them. But once you get there, it's like so worth it. So we've been having a good time out here. I'll be back in the office next week. Just a little quick getaway for us. But nothing really stops. Nothing slows down. People say, what are you doing out in the Virgin Islands? I'm swimming with sea turtles and trading hot stocks. So the same thing that I would be doing pretty much back home. Look, we're going to get right into it. And today's video is simply going to be an update of last week's. I think last week we absolutely nailed it. The major averages right now, I'm talking about the S&P, NASDAQ 100, look deceivingly bullish. Okay, that's the truth. Why? Because we're back in one of those environments that we actually see so often as investors and traders. And that's an environment that's being led by the biggest and best stocks, right? So the Mag 7 names, your mega cap names, they've really been the top and most consistent outperformers off of the April lows. That makes the indexes look a certain way. Now, when you look beneath the surface, there has been what I think is material deterioration over the course of the last 4 or 5 weeks now. October. Look, JC and I, we disagree about a lot of things. I came on here the other day and I said, he was actually right about what he was saying about small cap tech. I totally disagree. We talked about on the morning show today. I mean, October was a bad month. It was a bad month for risk on groups, for offensive groups. Sure, we have stuff like biotech that held up really well, but go look at all the failed breakouts printing just almost across the board. Quantum, space and exploration. The Bitcoin miners, are they going to hold these gains with Bitcoin completing a top, looking the way it is? I don't think so. What's up, VK? Naxos Island, super cool. Yep, I'm on St. John, guys, and that's the Virgin Islands are behind us. We're going to go check those out. It's a bunch of islands, and you can see them all. They're so close. It's crazy. They're so close. I had a terrifying trip in a Jeep going. Yeah. I believe it. I could see how that could happen. I'm trying not to drive in any extreme weather here. Only sunshine only. What's up, Rachel? What's up, Adam? Hey, Bill. Bill living that island life on Miami Beach, right? How about that, Dave? Let's look it up. Let's throw it up. Let's throw up the Dave. Can you guys see me here? How's the tech? Pretty good, right? Pretty good. So this is what the comment's referring to. Dave just reported earnings this morning. Nice pop running right here, trading at highs of day. Guys, I don't want to flip windows here, so I got the 15-minute chart really here, but we're going to look at the daily. And this is Dave. This is how Dave started its day today. Gap up on earnings, and it's still running, trading at the highs of day. Let's look at the 15. Zoom all the way out here. You got a pivot high. And if I flip it to the hourly, 285. 286, that's it. That's the all systems go breakout level for Dave. Looking really good here. What will also be interesting is that if Dave sticks some sort of a breakout here, then this one gets put onto a very short, prestigious list of speculative growth stocks that are sticking breakouts, and really just completing big bullish patterns. Because most of them these days look a lot like this. This is Archer. Right? Not sticking breakouts, failing to get the breakout done. SMR, another one, right? Failing up here at new highs, miserable failure. Look at the down candles, boom, 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 right? And this is what we're seeing all over speculative growth right now. That's the truth. Here's Joby. I'm trying to think what's another great example. Look at the quantum stocks. You can even look at the index level. But something like here's QUBT, right? All of these stocks that I'm just showing you poke their head out, right? Look like they're breaking out, and they have failed. And now a lot of them are back on to the lower bounds of their ranges, right? And look something like this, looking quite vulnerable. So that's the state of speculative growth. And then at the same time, you have Bitcoin. We drew this big green line last week saying, well, this could happen too, right? But right now it looks like this is happening, right? We talked about it. It's going to be one of these. Bitcoin, if you look at it on the squeeze, on our squeeze indicator, God, is this coiled? It's just sitting there telling us, guys, a big move is coming. Really big move is coming. We got to figure out which direction. Right now, I was saying on the show this morning, there's no other way to treat Bitcoin. This is IBIT that we're looking at. There's no other way to think about this right now than that's a top, right? This is a top until it's not. Bitcoin is guilty now until proven innocent, right? Why? What's the really big level here? It's that VWAP from the April lows. Look, if you did similar analysis on a chart of Bitcoin the spot market, you'd see the same thing, okay? ETH holding in a little bit better, but we threw up the Solana on the morning show. You can go see the actual Solana chart there, right? But look, VWAP from April lows, they're all breaking. On Solana, again, the spot market, which is far more important than trying to analyze the price action on some sort of ETF. I care very little about the price action on SOLZ. Let me see if I can pull up Solana here, actually. No, not yet. They got the big ones. But you're seeing the same action, I guess, is my point. I think we do have BTC. There you go. All right, so for something like BTC, you could see the VWAP coming in and getting smashed. No, I guess not. My computer's not going to cooperate. But anyway, the point is, right, IBIT teetering, completing a top. This is one that we're considering as part of the new 3Bs. We removed biotech when we were talking about the interest rate sensitive trade this summer, and now we've added Bitcoin. And these 3Bs, Bitcoin, builders, home builders, and regional banks, they're all teetering right at big support levels, big polarity zones where we've seen, this is dynamic support, the VWAP, right? So we've seen prices dig in and hold here over and over and over again off of the April lows. Right now, it's looking a little bit different, right? The action is looking a little bit different in the sense that, we've seen bulls kind of dig in, protect these support levels, right? And spark rebound rallies in the past, here, even here. But now this time we're not seeing that. Right, we're not seeing the bulls protect these big support zones. In fact, we're seeing the bears kind of slowly but surely take control at these big levels of interest. So I think the market is incredibly vulnerable right now. I think it's the time for caution. I think last week we came on, I was talking to members for the Breakout Multiplier call. I think I said we're 75% in get money mode. Today, I'm going to say we're 60% get money mode. That number has been going down since late last week, right? We're seeing more and more damage kind of build up. My island cat is here. We have a cat. I don't know. Apparently we have a cat here as well. So let's look at the other 3Bs. KRE is another one. This chart might look messy, but it's drawn up exactly how it should be. I have a VWAP from the November highs. I have a VWAP from the April lows. They're both converging at about the same level here, just south of 60. Then I have a VWAP from the pivot highs, kind of, creating a nice maybe potential VWAP pinch setup. I have some funky lines drawn here, like what could happen, but maybe it's looking more like this now for something like KRE. But the big level here is simply you're going to have the VWAP, which is going to start coming here, right, and putting a cap on price. And then this VWAP is going to extend out here and flatten and start to curl down. And if price keeps chopping, this is really your level. If we're below this VWAP from the April lows, call it 59.75 right now, then you're going to get confirmation of further downside at 58, right? The pivot low from October. And then again, this summer, this completes a little top if we're below there. So if you start seeing regional banks looking like this, you're going to know the market is probably under pressure, more broadly speaking, right? So that's KRE, the second one. And then last, I would say the most vulnerable, the worst looking group out there maybe right now is home builders. Home builders have a myriad of problems that they're dealing with. They have very, very industry specific issues and headwinds going on right now. I think eventually this entire industry group bottoms, and I think the longer term demographical tailwinds do take over for home builders. But that's a bull thesis in my mind that really plays out over the extreme long term. For now, home builders look absolutely awful. Again, just look at the VWAP off of the April lows. It's coming in right here. Price dug in earlier in October. After that little bit of volatility, we got a nice little bounce. And look at the rollover. That's a dead cat bounce. Didn't even get up to the VWAP from the pivot highs, the VWAPs that are anchored from September here. Didn't even test that level. Little shit bounce, rollover. Now back below those pivot lows. This is a confirmed breakdown, right? If this candle, you get this red candle here today, this thing's breaking down, and you have to anticipate home builders can explore a downside that's 10 to 15% lower, bring them towards the low 80s and retesting these lows from April. Okay, these three areas, you got to keep an eye on them. I think they've kept us on the right side. They've kept us cautious the past few weeks, and now they're alerting us that we need to be increasingly cautious, protect our money, start to shift out of get money mode, and back into save money or keep money mode. That's kind of the way I'm thinking right now. Just to wrap things up, I think we have to talk about the US dollar. So here's UUP. I don't have the dollar index data on the TC2000. I want to flip it to TradingView because I'm trying to do this in one window here today. Look, this is a tactical base, right? The dollar index looks similar. I think it's at like 100 today. I don't have it right in front of me, but the point is that whether it's DXY, the US dollar index, some sort of Invesco US dollar bull fund, which is what UUP is, these are tactical bases and they're completing, right? You want to drop a VWAP on something like this UUP just to prove that this tactical base is actually confirming higher. Look, we got that VWAP recapture, boom, 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 4 closes above it. It's go time for the dollar. What does that mean for risk assets? We talked about, a couple of months ago, how while we were basing here the dollar, right? I remember saying this might be the single most bullish data point. Everything else was working. Speculative growth was on fire. All the hot stocks were going. The Mag 7s were working. The market was really clicking. And we were looking at this chart of the dollar and we're saying, well, that could be a potential problem. Now that is materializing, right? That kind of scenario that we were anticipating or thinking, oh, that could be bad in the future. It's happening now. It's happening. We're getting confirmation that dollar's headed higher. The path of least resistance for now is higher in the dollar. What are some things that we could look at, right, to get an early read, give us confirmation? And I know traders are going to watch what I'm doing here and say, you got your crosses wrong. You're looking at this cross upside. I don't care. I'm not trading these currencies. I'm using them for information. But this is the euro. If this is a top, right, in the euro, this is by far the largest component of the dollar index. It means more than anything. You don't want to see this thing breaking down, right? We could. If you wanted to trade, we got like something like the currency shares euro trust here, right? But you don't want to see the euro looking like a top. That means higher dollars, more pressure on risk assets, more headwinds, right? For the vehicles that we're typically using to exercise a bullish thesis. Another, okay, well, the euro's likely to look like, so the pound already completing a top, right? Why am I talking about a potential top in the euro? Well, because other currencies already completing tops. Here's the pound. If you want to look at the actual chart of the pound, this is the GBP USD. These are tops, right? How about the CAD or the Canadian dollar, right? Look at this. This is heading lower. How far do we go? I don't know, but that's how much upside is going to be in something like the dollar index. How about Canada? This is the iShares Canadian Trust. I don't know, however you want to draw it, but that's a top, right? It's a top. We broke down, we retested from below, and now you're getting that confirmation back below the pivot lows. How much further can the CAD fall? I don't know, 3%. It's looking like get you back to those lows from earlier this year, and forget about the yen. I don't want to talk about the yen. This has been a top. This just continues to be incredibly weak, right? Japanese yen. So everything, all of these currencies, the 4 major currencies, are completing tops against the dollar. That to me tells me that's all right. Supporting evidence saying that's probably a tactical base, and we're headed higher for dollars. So that's it. That's really how I'm thinking about it. The 3 Bs, that's going to be your early. Those are going to be your early indications, right? That there's further downside ahead for the broader market. The major averages probably follow. Tech follows. All the strong stuff probably follows in a way. You could argue you're already starting to see it out here today. Here's the NASDAQ, right? Looked like we're trying to break higher here, make a new high, a little gap lower today. Here's XLK, right? That's the way that looks. You could call this, tiny little short-term coil. Okay, well, for now, that's gone lower. Where do buyers step in and kind of send it higher for another test? We'll see. Something like the IWM. God, speaking of failed breakouts, I mean, look, this is a major level. You lose this level, you want protective puts right now. Bet on a failed breakout in the Russell 2000. From failed moves come fast moves. You're looking for protective puts. I think you could define your risk right here. You could get into them, and then you can close them out. In the event that you're wrong, you could probably make that determination a couple points away, right, to really, really minimize your risk and only be in the protective puts if we're getting further downside. I would drop a VWAP somewhere like here and say, okay, if we break back above that level, a couple points higher, I'm out of the puts. You could get out of them for a small loss. You don't have to risk your entire basis in that kind of a trade. And say the market actually does roll over. I mean, God, who knows? How long does a corrective wave last? How far do we go? I think something like this, you would measure it out. There's two ways. I'll show you. I'm looking for a downside target on something like this. First, I'm going to look at the 38% retracement. That puts me around 221.75, right? Comes in right here. 38%. All right, corrective waves, you tend to correct at least 38%. Only the strongest, most resilient corrective waves don't even give you 38%, right? Other corrective waves that are still counter trend in nature can correct as much as 62%. That gets you down here low 200s. Then another way, another tool for finding a price target would be the VWAP from that pivot low, right? Where the advance began, right? This is where the advance began back at the April lows. That's the price action and the time frame that I'm fibbing out here. And then when I drop a VWAP from that same level, guess what? It comes in right at the 38%. So I think if you're looking for a downside target in something like the Russell 2000, look no further. 220, 222 is probably where we're headed. That, if you're doing this through index puts, that could be a really big move and a huge winner that could really help you or help insulate you from the losses that you're likely to take on in the event that we do kind of dream here. So those are some things that are on my mind today, guys. I'm going to leave the chart up, just check the chat quickly. Like I said, a little less screens than usual today. So maybe didn't throw up all the charts we wanted to, but we'll be back in the office next week. Things will be back to normal. What's up, Dawson, Curtis? That dollar is the thing. Bub the dubs. He gets it. First must define a crypto bear market. I don't have to define anything. If it starts to hurt me in my accounts, that's bear market enough for me. I'm going to protect myself. You worry about what's a bear market for you, Dawson. We're just going to come out here and try to navigate these turns as best as we could due to the long exposure that we're going to have at times like this. It's about protecting the money. That's what Strata is doing. I love that. I love it. Do you think it's possible for crypto to go? Yeah, look, what part of crypto? These altcoins have been in a bear market for a really long time. It's been terrible out there. So if we're just talking about like the big three, right, or the big five, or the big 10, sure. Has it been a bull market? Yeah, maybe. Not a good one. Not even a good one. Compared to what crypto's used to, historically speaking, this has been awful. Even for the blue chips. What, Ethereum and Solana can't even get back above prior cycle highs? When in the history of crypto bull markets have these major blue chip cryptos not eclipsed their highs from the previous cycle? Go back and do that math. Go back and do that work. When has that ever happened in the history of crypto markets? That these blue chips can't even get back above where they were last cycle? We've never seen that. This would be the worst crypto bull market in the history of crypto. I know it's not a lot of time, but it easily would be. So let's go. I mean, that's why we've been sitting around for so long saying, it's time for crypto to start working. It's time for crypto to start working. Well, guess what? From my experience, if I'm sitting around forever saying it's time for these things to start working, why aren't these things going to start working? What is going on here? Something might be seriously broken there. And maybe they're never going to start working. Maybe we just don't get that big blast higher from crypto this cycle. Every time is different, guys. So you got to kind of be flexible and never dogmatic in your approach. You want to be open to new things happening because this is the market. They're going to throw new things at us every day, right? To think that it's always going to be the same, we can't do that. So we'll see. But for now, like I said, for now, it's as simple as this for crypto, right? How to treat crypto, that is a top in Bitcoin until it's not. IBIT, back in the 50s, top. Path of least resistance lower, bears in control. I don't know if we get another 5-10% across the board sell-off tomorrow night or tonight or tonight like we had last night and the night before. But that's the environment we're in right now, right? That's the risk you're taking holding a lot of crypto exposure right now, is that the bears are in control of the entire asset class and we are susceptible to big downside, right? Risks are elevated. The risk reward is not what we want from a bullish standpoint. What do I do in environments like this? I sell a ton of stuff. It's incredibly frustrating. And I tell myself, I might have to buy this back in 2 days if I'm wrong. But I don't sit there and hope that we're not going to get some sort of big downdraft, right? Because I am prepared for the type of price action that is characteristic of a bear market when I see price action like this. I start acting in a way where I'm saying, okay, I'm recalculating the risks, right? In my mind, I'm saying, wow, crypto, if I'm holding big positions, Solana, Bitcoin, Ethereum, the miners right now, I'm redoing that math in my risk reward equation, right? And that risk starts to grow when I start measuring the downside, the potential downside from the stuff that I'm holding. And then I measure the reward and I say, this isn't the trade that I initially got into, right? This isn't what I signed up for. This has changed. I don't want it anymore. Sell a lot, reduce your exposure. And I've just gotten used to that over the years. I'm wrong all the time in these situations. I'm wrong all the time, but I'm always right to protect myself. And I'm happy to buy things back in the event that I'm wrong a couple days later. Do they even have wash sale rules for crypto? I don't even know. It's probably the same as stocks, but I really don't care. Jonathan Vorkheimer, Curtis, Alfonso. Am I frozen, Spencer? Am I good still? I'm good. Okay. I just frozen on my screen. So I'm going to end it there, guys. This has been awesome. I've lost the chat a little bit, but I do agree with Bub Didubs that the dollar is the thing. BC Lund in the chat. Wow. Brian Lund, good friend. Awesome follow on Twitter. Writes a great blog. Brian's just one of the greats. Good friend of mine. Thanks for stopping by. Perlman. Love it. Love it. Perlman saying nice things. He's the best. These are my guys. Tom, what's up, man? Yeah, guys, thanks for coming to check it out. Uber's probably okay. Uber's just, this is what Uber does. It's been, I was complaining on the morning show. It's been a frustrating stock to own. You know what Uber's doing? It's acting more like a transportation stock than a software stock. That's what Uber's been doing. All right. Yeah, man. Yeah, Bill. Okay. Shout out to the islands. All right, everybody. Thank you for joining me. We will be back next week, same time, same place. Tuesdays, right after the morning show for your next episode of the Open Bar. Everybody have a great Tuesday. We'll see you out there.